Good day and welcome to the FX Warrior YouTube channel. In today's video, we are going to be discussing advanced ways to use the moving averages to become a better trader. Now, the moving averages are usually used to show which trend the market is currently in. Usually, when the price is above the moving average, the market is in an upward trend, and when the price is below the moving average, then the market is in a downtrend. This is common knowledge, but there are 3 other ways to use the moving average that you've never heard of. That being said, let us dive into the 3 advanced ways to make use of the moving average indicator. Now, the first way is to increase the risk to reward on a trade. Here is what I mean. Some traders might take a 1 to 2 risk to reward trade, or a 1 to 3 and 1 to 5 risk to reward trade. But this will cut the efficiency of the trading system, because the only way professional traders make money long-term is by riding the trend. What does that even mean? It means that they will stay in a position until the trend is over, so they do not cap their upside by using risk-to-reward templates. So how do we increase our earning potential using the moving averages? First, you're going to add the moving average indicator to your chart. To do this, you're to click on the Indicators tab on TradingView. Next, search Moving Average Simple. Click on the default one provided by TradingView. Now you can always change the period of the indicator and even the style and color of the indicator by clicking on the Settings tab on TradingView. For this example, we will be setting the period of this indicator by clicking on the Settings tab and then changing the period to 30. This will allow us to follow the trend more accurately than a faster period. We'll also click on the Style tab and change the color to yellow, so it'll be easier to see. Now, this is how you use this indicator to increase your risk to reward. Let's say that you have a buy trade here, instead of just capping your trade by using a fixed risk to reward structure. You're going to take the trade and continue trailing the trade using the moving average. The concept of trailing is when you go move the stop loss of your trade in profit and let the trade run until the trade inevitably hits the stop loss. In this case, we will trail the trade using the moving average. This is where we would hop out of the trade because the trailing stop loss would have been hit. You can also use the moving average without the trailing stop, so you only close the trade when the candle closes on the opposite side of the moving average. In this case, you'll be getting out here. Does that make sense? Okay. The second way in which you can use the moving average is for advanced trend and inter-timeframe analysis. Now, if I pull up a 10 moving average, the market is obviously in an uptrend. If the price crosses the moving average to the downside, it'll be wrong to immediately say that the market is bearish because you're not considering the larger picture. A trend is an event that has been happening for a while, not just based on a short-term basis. So what should you do? We're going to use a system of moving averages to know the state of both the long and short-term trends of the markets so that we only trade when all the trends align. This will give us a better chance at winning most trades than losing. Now on this chart, I have the 1000 moving average, which is yellow for the very long-term smart money stand, because the market trend does not change overnight. The green moving average is the 200-period moving average, and the white line is the 10-period moving average. Now you will only buy when the price is above all of the moving averages, like here. Now note that you have to add more indicators for your confirmation and so on to make this system your own and enjoy its benefits. The third way to use moving averages is as a volume or volatility filter. This is a scenario where you make use of moving averages to know when a market is consolidating or not ready to move and trend properly. For this example, we're going to be using a special kind of moving average, which detects price changes a lot faster. The name of the indicator is the Kaufman Adaptive Moving Average. To add this indicator, click on the Indicators tab on TradingView. Next, search comma, and select the first one by aggregate. Click on the Settings tab and change the period of the indicator to 150. This indicator specifically does a good job of finding ranging markets and can keep you out of a lot of them. Now, how do you know when the market is ranging? In this zone here, the price crossed the comma multiple times in both the up and down direction. In these kinds of scenarios, you're to stay away from trading during those periods and wait for the markets to start heading in one direction again. And if you add the 1000 moving average, it'll better aid you in knowing the next likely move of the markets. This is how I was able to build my system, which in good weeks can yield up to 10% profit. This video is not financial advice and is only for educational purposes. Do your proper research before taking any risks on trading. If you enjoy these styles of videos, click on the subscribe button so you can get notified when I release a new video. Stay green and stay blessed.